Hello and welcome back to the Ever Changing World podcast. I'm your host, Ava Zanetti, and today's episode is once again very timely. And today I'll be talking all about inflation as well as the recent stock market and cryptocurrency crashes that we have seen. Stock markets and crypto go through ups and downs in really heavy waves. But this one was a little bit unique since I wanted to tie it in with inflation. I also wanted to give everybody some investing advice. Of course, I'm not a financial advisor, so don't take my advice for a word, take it for a grain of salt. But more advice basically when we're looking at current world situations, how we should go about it. Someone I absolutely adore and look up to is Ray Dalio. He's an amazing book that recently came out. I love his original book, Principles, but he has created a book called The Changing World Order, which is all about looking at patterns throughout history and also in terms of economics, and looking at those patterns and how those patterns translate to um, our real world and now. So, a lot of the times, and it's pretty crazy to see the statistics, but these patterns in history goes through really big ebbs and flows, and it's really important that we track these things. And Ray Dalio has done just that for us in a really easy to understand way. So those are the two main topics I'll be talking about today, but who knows, I always end up on some type of rant when I'm on this podcast. And I guess that's the joy of it. So, yeah, why don't we just get started with the introduction? First, I wanted to kind of say thank you and as well celebrate that today is week 20 of the podcast, or this is the 5-month mark, which is crazy. I can't believe I've recorded almost 20 of these, and I can't believe I've stuck with it this long. I was talking to my mom the other day, and I talked to her actually probably 2-3 months ago about this. When I hit I think when I hit 2 months was when it felt really real. And my mom kind of laughed and she was like, "I didn't think you were going to last a week. I thought you just bought a microphone. It was gonna last, a really short little while, and then it was, you're gonna go on to the next thing." But I stuck with it, and I'm really glad I did because I absolutely love the podcast so much. So, just a huge thank you to you all who listen to the podcast. It's been such a joy. I've been able to just talk about whatever I want to talk about. As I always say, even if there was one listener listening to the podcast, which I'm sure is closer to that than 100, it's just a joy to be able to have some sort of platform, or even just a place where I can talk about things that are important to me. And I also learn a lot by doing these. I'm able to talk about and conceptualize ideas that I might have not really thought about in depth if I didn't do this. I think a lot of the times in our lives, we don't take enough time to take a moment to slow down and actually learn about things we want to learn about. We get caught up in our jobs, our careers, and the one specific thing that we were taught to learn, due to what we chose at, 18 years old. But I think it's just important to be inherently curious and always just want to learn, always want to have that joy of learning no matter what it is that you learn. And that's why I have so many topics that I talk about on here. Obviously, you probably see a pattern of me talking more about business, economics, and science than anything else, but it also shows what I'm really interested in. And last week I tried something new, talking about the Roe versus Wade case. And actually, looking at the statistics, right, I don't like to really, gall over it, and really, meticulous exactly what it is. But I think it's really, important to think about it at least, and see what people are enjoying. And I realize the episodes that I actually enjoy less recording actually do worse. And usually those are not related to economics or STEM. So I think that's really funny. And I think, it's really cool to see the statistics, help to understand, why people enjoy certain things. So, anyways, I can't believe I've lasted this long on the podcast. And it's been honestly such a fun time, and I can't wait to keep doing it and, really get into just doing even more podcast episodes. I always hear certain podcasters that I really enjoy always talking about how they, after week 20, it's really hard to come up with ideas for the podcast, which I think is really funny. I don't think I'll have that issue necessarily since I like talking about so much, and I think I can just blab on for hours and hours, and even the introductions that I do last, 10 minutes. So, these things I think are important to know, and it might be a learning curve when I maybe run out of ideas at some point, but I thought I was going to run out of ideas a long time ago, and that has not happened. So, it's just been a joy. I've also learned how I like to record the podcast. I don't like going in with a bunch of notes on a doc. I like talking about the issue, looking at different articles, which you'll see I always link the articles. And, I really like reading out the article, reading parts of it, snippets that I find important, and then talking about why I think it's important and how we can wrap that background to the real world. So yeah, I think that's really important to note. As well, I usually talk about the books I'm reading, but again, I haven't been reading much. Exams are around the corner for me. I have 3 exams this semester, which is honestly quite the headache, but we're gonna get through it. As well, I'm in the midst of moving. We're selling 2 houses right now, and that has been a little bit stressful, I'm not going to lie. The house I'm currently living in is currently being staged. I actually have to work on that after I record this. And the other house has already been staged, and the photos have been taken, and the photos for this house will be taken tomorrow. So it is, a stressful time, but, the podcast really does help ground me, and I truly just love learning. I love sitting here and talking, and really just talking about things I enjoy. Another thing that recently has popped up is actually one of my summatives or year-end projects for one of my classes for English is making a TED Talk. And it was really funny because I was talking to my friends about the podcast, right? Like, I was like, yeah, I talk on there. But a TED Talk is much different from an hour-long podcast. So I think I'm going to have the opposite issue of a lot of people. And I think instead of having the issue of, being able to find a topic that I want to talk about for 5 minutes, I think I'm going to have the issue where it's going to be hard for me to, one, find a topic that I, out of all the ones that I've already done and even more that I have in my mind that I want to talk about. As well, I think the other issue is that I talk for so long. I can rant about pretty much anything for over 10 minutes at least. And probably even over 20 minutes. So I think that this is going to be more of a challenge for me, is breaking down my speaking structure into a 5-minute impactful speech instead of a long form hour podcast. And the reason why it's hard for me, I've done speeches that are short and I love doing speeches as well. Clearly I love public speaking. But I think the main issue for me is that it's very difficult for me to stop talking. I'd love to show how much I know a topic and how much I love it and how much I've learned, and I can just talk and talk and talk, and that's what I do on the podcast. But in a 5-minute speech or TED Talk, really, you can't do that, and you have to really slim it down to a really short amount of time. And I think that's the most difficult part for me, and I think that's something that I'm going to have to learn. So, maybe after I do that project and hopefully get a really good grade on it, which I will get a great grade on it, we're gonna, say I will, I'll talk about probably speech structures and TED Talks, and I think that'll be a really interesting topic. So within the next month, I guess, that might be a topic that you will be hearing, and one that you might learn to enjoy. So yeah, those were the main things I wanted to talk about here. I think it's again super exciting that we've already done 20 weeks. Thank you guys again and again and again. And with that note, why don't we just talk about inflation and the stock market crashes? So first I want to do, as I usually do, a little bit of a brief overview about inflation. There is no episode you have to listen to before this, but I've talked about cryptocurrency scams, NFT and NFT scams, as well as Elon Musk buying Twitter. That is 5 episodes, I believe, that relate kind of to this. As well, I talked about, Elon, Twitter, NFTs. I've talked about a lot that relates to this stuff so far. So, if you want to, go ahead and listen to it. I highly recommend, obviously, Metaverse as well if you want to, I guess, count it towards stocks. It kind of counts. So yeah, I think you should definitely check those out because I do talk a lot about business and money on this podcast. Okay, so first off, I want to just talk about what inflation is because I think a lot of people can't wrap their heads around the concept at first, and I think that's where people get confused, and it's where the difficult part comes in when we're talking about inflation at a large scale and talking about the inflation that's currently happening. If we can't understand something, we're not going to be able to, reapply it. So, in simple terms, this is through Investopedia. Again, I'll link it in the bio. Inflation is the decline of purchasing power of a given currency over time. So, the idea behind it is, why don't I use something like, I don't know, apples. So I have 10 apples, and those 10 apples, we're going to use something obscure, I guess. I'm not going to use money because I don't really want to properly equate that. But let's say I have 10 apples, and this represents money, right? 10 apples. And I want to buy a water bottle. And let's say it's worth it. So those 10 apples can buy 2 water bottles, right? It can buy 2 water bottles. Now the inflation rate has gone a little bit up. I don't know the exact percent, but it's gone up. And now for 8 apples, we can buy a water bottle. And it's not $5 each anymore. It's now $8 each. So my 10 apples, or I use dollars. Well, it's 8 apples each. So my 10 apples are not worth 2 water bottles anymore. It's worth 1 and a bit. So if you've ever seen a World War II picture, and I'm sure I'll talk about World War II in a future episode, but if you've ever seen those World War II photos, or really photos of any time in a wartime economic stress zone, it's really interesting to see because you will see these people with buckets and buckets of cash. And you're kind of looking at the photo and you're probably wondering, why are there buckets and buckets of cash? And it's because that amount of cash is probably worth nothing. We've seen this in Russia. Their dollar is worth very, 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 very little right now. And that has been a really big deal. Billionaires have lost their billionaire status in Russia because their money costs so little right now. So inflation is that idea where our money costs so little and, prices skyrocket because of that. I'm going to use the home example. So not me. My family is currently trying to buy, or we did buy a home, and we're currently selling the 2 other ones. And I don't want to disclose where I live or anything, but the prices of homes have gone up astronomically. I think January it might have been a little bit more heightened, but now the housing market is still insane, and it doesn't look like it's going down anytime soon. And it really is influenced by inflation a lot. I am seeing houses, in my area, and they're not even really houses. They are townhouses, tiny little townhouses that are going for $1 million. And this is in Canada, right? So Canada, we usually have crazy prices anyways. We like to hike those things up. But it's still, $1 million is really insane. So, it's super, super high. And, the prices just keep going up and up. So we see this with the housing market. And we see this with so many different other markets that inflation is just all around us, and it's really been around us a lot. So, some types of inflation that we can kind of talk about is demand pull, cost push, and built-in inflation. I don't know if I will talk about exactly each one, but I guess an example this is a great one, an infographic from Investopedia, once again, is how inflation has changed the price of a cup of coffee over time. So in 1970, a cup of coffee was only 25 cents, and in 2019, which is 3 years ago now, pretty insane, it went up to $1.59, so it went up, oh my gosh, I don't even know how many percent, but that is insane, of course. And as well, you also have to realize, right, we're not being paid the same amount, right, and expect to live that way. minimum wage has gone up. Well, that's kind of an issue in and of itself. But minimum wage, at least in theory, should go up. People's salaries go up, so everything kind of goes up with this inflation, and it's kind of like a catch me if you can game. Everything just seems so unreasonably priced because it is. But relative to each other, and I think this is important to note, relative to each other, it's not that insanely priced. Obviously, our money can become valueless very quickly, and that's the scary part. But something going up again for that, 5 apples for one water bottle to 8 apples for one water bottle. The thing is as long as you're being paid more, it's still going to be the same amount or same margin of money as before relative to each other. So it's really not going to be, it's not like things are getting just, priced super high. Like, you're not paying hundreds of dollars for water just because the market wants you to. That's not sustainable for the economy. And inflation really isn't that sustainable for the economy either, which is kind of another topic that I want to go into. And it's, another big issue about this. So the whole thing and the whole people that usually combat inflation, and obviously I'm talking in 2022 in May, get insane, but I'm talking in May, so the thing about this is it's a little bit later after COVID-19. We're about over 2 years after COVID, and it's pretty much settled down now. But inflation was super high then, of course, because we were all staying home, no one was working, and things kind of just went to hell, right? You could put it into layman's terms, everything went to hell. If you don't know about COVID-19, I mean, you gotta go look that up because you're way too young, I guess. If you're listening to this way far into the future for any which reason, you're way too young. But yeah, the whole idea of inflation and people usually control it is the central bank. And, it's necessary to manage the supply of money and credit to keep inflation within purposeful limits to keep the economy running smoothly. Because if it goes too high, it won't run smoothly. But sometimes a little bit of inflation isn't too bad. So, overall, an increase in inflation, and the root of inflation is the supply of money. So, you ever hear that term, you can't print more money? That's kind of that idea. If you print more money, the money that we have will currently be worth less. So, a dollar won't be worth a dollar anymore. It might be worth 75 cents, let's say. So everything, everything, becomes less valuable, and then we have those wartime pictures, right? And then inflation rises, and it just goes to shit. So we can't be doing that. And money supply can kind of be increased by the monetary authorities, either by printing and giving away more money to individuals, which I mentioned, and sometimes they actually have to give more money away to settle inflation. So, the thing is you don't want to print more money if we're in a stable economy, but sometimes if it goes too bad, that is one of the steps we need to do. Or by legally devaluing or reducing of the legal tender currency. So I mentioned again, currency going down, Russia. And that actually does settle inflation because it forces all the prices of the other goods to go down. So if, my dollar is valued at less, it forces everything to push down and it kind of evens itself out. Commonly they usually loan new money into existence as reserve account credits through the banking system by purchasing government bonds from banks on the secondary market. So it's basically like they're scamming away around things. If you ever see those infographics that say, oh my gosh, the US is like trillions of dollars in debt, the world's in trillions of dollars in debt. Well, a lot of this has have to do with us just fudging things and making loans from, non-existent accounts. And you have to make them existent so it actually works. And, it is a really complex issue, fixing inflation and, working around all these issues. And it is, kind of, funny, but, it's also really important to just kind of trust it and, go through all of that. So, yeah, I think that that's the basics of inflation. We can also talk about the demand pull, cost push, and built in. Maybe I'll just read the infographic that might help a little bit. So, the demand pull is when demand for goods or services exceeds production capacity. So, this is when, let's say, this example here actually works perfectly. Let's say there's the Nikes, there's so much demand, so much demand, so much demand. And that exceeds the amount that they have because they're limited edition. Oh my gosh, the price goes super high, right? And then the real sale market, the price goes super high. That's that idea. We see it all the time, even without this crazy macro scale. We see it at a micro scale a lot of the time. The other great example is cost push. This is when production costs increase prices. So things just cost more and we just gotta increase prices. And then built in. So when prices rise, wages rise too. In order to maintain living costs. This is the one I was talking about. So we almost have to even it out. So again, the ratio fixes itself where people can work at a livable wage, in some form or another. So these things are really important to think about, and it's definitely something that when you are looking at inflation, you can think about these three different techniques or tactics, I guess, that inflation comes about. But I think it is important to note that a lot of these are pretty self-explanatory and ones that you might have already heard of. So, maybe just keep it in mind while you're learning about this stuff. So, let's go to talking about. I want to talk about the stock market, but I believe there was something else I wanted to talk about. I think it was with inflation. So U.S. inflation rates. So inflation rates actually aren't super high right now, surprisingly. 1980 we had a huge spike, but it is more spiked up than we would like it to be. So when I looked, I was actually pretty surprised from this number. The rate for inflation in 2020 was 1.23%. But we're feeling a really huge increase in this, despite this graphic that I have here. We are feeling a really huge difference in inflation just due to COVID and the amount of jobs that were lost. And I think that is really the biggest issues that we are facing in terms of the economy is all those repercussions of COVID and such a large pandemic. I mean, it's such a massive event you can't ignore, and really your money can't ignore either. And we online shopped a lot. Businesses are going bankrupt because of it, and all those things are kind of just going in such huge ebbs and flows. But that's kind of how the world works too, right? A lot of people really panic when there's some sort of something like a pandemic going on, or people really, obviously pandemic for good reason, but people really panic when these things like inflation rise or the stock market crashes, which we'll talk about. But a lot of the times these things do go in really big waves, and that's just part of the world. We're gonna have ups, we're gonna have downs, and we're gonna have periods of depression and periods of super amazing economic growth. And just learning how to deal with the time that you are in is what's most important. And again, Ray Dalio, I have to show him his book again, The Changing World Order. Amazing book, highly recommend. It teaches you so much about how the world works, the flows that we go through, the ups, the downs, the all arounds. And I think it really is important to talk about when we are looking at inflation and all of these other really big topics. So now I want to move into the stock market. And, the shares, if you heard, of the stock market and crypto, I'm going to focus on the stock market today because I haven't talked about it yet. The stock market had a big crash. And I want to talk about this first article from Fox. Or, you know what, maybe I'll talk about the Globe and Mail. So, this was 17 hours ago, published 5 hours ago, so it's been recent. Again, I'm recording this on Tuesday night because this week has been so busy. Once again, my episodes are being pushed back when I record them more and more, but I'm gonna get back into a proper routine soon. So basically, the title of this article is "Stocks Sharply Higher as Strong U.S. Retail Sales Report Eases Concerns About Economy." So I can't read it, I guess, because I don't pay $2. And I thought I could read it, so never mind. But basically, the stocks have gone down and all that. And it's been pretty crazy. So the really big thing right now, and if you know anything about what's happening in the world right now, we have been having really huge supply chain issues all around the world. We have, those super big shipment containers, those super big boats, have actually, not been able to carry those super big containers. So if you ever see those images of those really big shipment containers that fit a bunch of stuff in it, all your, Amazon parts or products. And we've actually lost a lot of them. So what's been happening is we've brought them into these areas of kind of poor, I guess, economic growth. We've brought them to a lot of third world countries, these containers, and the issue now is they're stuck there because there's nothing to bring back, and it's not financially worth it for these shipment containers to be brought back. So even though we have enough shipment containers made in the world, we basically have lost them in the way. So our supply chain issues have been huge. One that I remember recently, and I don't know if it's still going on anymore, but the one I remember really well is all the records being in really low supply. Records have been on really all-time lows just because of that fact that it's been in such this decline in supply, and we haven't really been able to make new records because of that reason. Another one is the chips. I know with PlayStation 5, when that whole thing was happening, this was a few months ago, but it's good to bring up. The chips, there's a huge chip shortage, and I don't know if it's still going on actually, but I know there has still been issues with that. So, all of these things are super big issues that do relate right back to the stock market, right? Everything in economics of the world is connected. And that's why when, you're looking at business, you don't just want to look at the micro scale. You don't just want to look at what's going on within your own country. I think it's very important to look beyond that and really look at towards the issues that are happening internationally, what is happening over the waters. I mean, obviously things like Russia and Ukraine are things that we do need to talk about and think about economically as well. Gas has been a huge issue as well recently, and how Russia has been kind of stopping the use of gas from entering into Europe, and there's been issues with that. There's been huge issues with just gas in general and prices going up, and people have been talking about that, and a lot of that actually is a literal shortage. We are running out of our natural gases, and that's why we need to move to electric, of course, or at least more sustainable sources of energy. But obviously, the big guys in charge, who are making a ton of money from gas, don't want to give that up, right? They've been super rich from this, exploitative practice. A lot of people who own these things are older, so they don't need to worry about being alive in the next 50 years because they won't be alive in the next 5 years, right? As bad as that sounds, it's true. And, it's been a really, these issues have been really big, and a lot of people are pushing for it. So, economically too, we have a lot of these issues, and we just see them prop up more and more and more and more and more. So, let's see what's going on here. Okay, so I want to talk about really this main thing here, which is on this article by the Financial Post. And, the content title is First Inflation Returns. Will Strikes Be Next? So, work shortages are one of the most dismal consequences of inflation that has been largely out of mind. So, surging inflation over the last year has Canadians on edge. So, I live in Canada, by the way, but these issues kind of directly relate to the States. The erosion of purchasing power we notice every time we visit the store or pay a bill is unsettling for everyone and frightening for many, which, of course, I can highly agree with, and I think a lot of people agree with. So, work stoppages are one of the dismal consequences of inflation that has been largely out of mind since the Bank of Canada began a successful targeting of 2% increases in the CPI. So, low inflation also tends to be stable inflation, which helps steady economic growth. So, we want, even though if we have inflation, it's fine, we obviously just want a lower inflation rate. And this is really important to note. And this can help keep a stable economy as well. So when inflation is under control, employers can easily forecast their revenues and understand what competitors are doing. So they can actually properly analyze how much they should be paying workers, what deals they should be giving workers, to keep them around, and really just what things they should be doing at a workplace, what they should be doing in general. And, employees can easily forecast their cost of living and compare wages as well on what's to offer elsewhere. So this really helps with the negotiating side of labor contracts easier, produces fewer surprises that makes people want to switch out their contracts or quit. And, when inflation is high, it tends to be volatile. So, the economy goes through these, really big ups and really big downs. And this makes things harder for both sides. So employees' forecasts of revenue are worse, and unstable value of money muddles the read of competition. Employees can get nasty surprises from the dwindling value of their paychecks and begin to judge their own position with reference to whoever they know of who got bigger increase most recently. And then there's obviously huge ups and downs in really whatever field, and labor, kind of decreases. So there has been really big rumblings in industries, such as hotels and steel medical services, the ones that were kind of put through the ringer during COVID. Hotels, didn't exist really during COVID. Steel industry, they've been working this whole time, and medical services, obviously. But they have been actually quite good still, which is really interesting. So in 2020, and maybe that is because they didn't lose their job. And in 2021, we lost about 5.5 days to strikes and lockdowns for every 1,000 members in the workforce. It's a new low level that we've become used to. Days lost per thousands of workers. So the single digits since 2005. It's really interesting to see that we've had really, really low levels of strikes. When we look at the numbers here, this chart that I'm looking at, you can look at the article as well. Around mid-1970, I would say, it was at a peak. And there were over 80 workers per 1,000 workers, 80 days less per 1,000 workers on this kind of average. And honestly, it hasn't been that bad, but it is going up. So when you look at this chart, we'll see it was really low for a really long time. It went down, after around 1990, settled, and it settled until now. It's going right back up, and it looks kind of scary that it's going up because who knows, it might go all the way back up to where the 1970s was, but we're hoping it isn't going to, obviously. Because strikes, as good as they are, they can be really damaging to companies and economics as a whole, because when we don't have workers, our economy cannot flow properly. And then as well, those workers that are home that quit or stopped working, they can't do anything either because there's no workers. So obviously just not a good time all around. So, this chart kind of shows all of this, and this, experience is, historically unusual. So from 1995 to 2005, when the 2% inflation target was newer and less credible, days lost per thousand workers were typically in the low teens. In the mid-1980s, the Canadian economy lost about 30 days of work per thousand workers, and in high inflation in the 1970s, the typical loss was twice that. At worst, strikes we have almost 90 days per thousand workers, which is crazy. And our economy is already starting to meet surging demand. So the whole world is short of energy and food, which is a huge issue, obviously. Energy, of course, our natural resources are going, and we don't have much of them left. Food, we need people to make the food, and we also have so many people on the earth, right? We're basically at 8 billion people on the earth, which is really crazy. And of course, the supply chain issues. So, many have been stretched and some are broken. And obviously, lockdown has not helped and has driven so many companies out of business. I've seen so many companies been bankrupt. An example is at my own local mall, we had a Disney store. And this might not just be because of COVID. It might have been declining for a while. But, a great example is Disney, this master corporation. Their store in my mall kind of went bankrupt. And they weren't making enough money to sustain rent and workers, which is pretty crazy since Disney's such a huge company. So, things like that. We're seeing these companies that we think are huge powerhouses just fall. Again, at the same mall, I have seen so little of actual, stores and corporations. I've seen so many more small businesses. Small businesses are just going in and out of these random storefronts, and it is pretty insane. So, a lot of these again, driven companies out of business, and as recent threat of carpenter strike in Ontario showed, a resurgence of strikes and lockdowns would add to the already eye-popping price increases. And crimp production is already producing. So thus employees and employers seek quick action to bring inflation down. Work stoppages could exacerbate the mismatch of supply and demand and push inflation higher yet. So the issue is, right, when we have workers that are, complaining about working and wanting to get out of their contracts and all of that, it's kind of a catch-22 because these people are complaining about it, but then it's because of the high inflation, but then inflation just keeps going higher because no one's working. So it's just this really big loop that can go on forever, and that's why we do need essential service to stop it. And that's why we do have the government, and we do have things that are able to stop these big issues in their tracks because it can become really, really, really out of hand. And that is where all of our issues kind of arise and pop out. So, the whole thing with the stock market recently, and I'm not just talking about jobs, I guess, anymore. But to look at the stock market, I might do the financial post because that's a good one. But maybe I'll talk about Warren Buffett. So inflation has been spiking, which of course means stocks have been plummeting up and down, up and down. So Warren Buffett, big money guru, obviously, has recently been talking about, he's a big stock guy. With these consumer prices that are still surging, how to follow in his lead and pick his stocks. Obviously, I have no financial advice, and I don't agree or disagree. I'm just neutral on this. I'm just telling you what he has said. So take it with a grain of salt. So price levels continue to rise at a rate we haven't seen in decades. And I believe we are, much near 40-year highs, which is crazy. Since, there's obviously been a lot that's happened in the last 40 years, like in high inflation rates, but we have almost exceeded that. So in April, the U.S. consumer prices surged 8.3%. Which is down a little bit for the 8.5 in March, which is really, but not much. Spiking inflation has severe consequences for your cash savings. So, Warren Buffett has talked about this. And, in 1981, he wrote a letter to his shareholders, Buffett, highlighting two important business traits investors should look for when trying to fight inflation. One, the power to increase prices easily, and two, the ability to take on one more businesses without having to spend excessively. So he's had some different holdings. So American Express has been one of the holdings that he has shown, and we've even seen their pricing powers as raised this annual fee on their special platinum card from $550 to $695, and it is also directly benefit in an inflationary market. So, American Express, if you don't know, makes a lot of its money through discount fees. So, merchants are charged a percentage of every Amex card transaction. As the price of goods and services increases, the company gets to take a large cut of larger bills. And, obviously, business has been booming because of this. And the company's revenue jumped 29% year over year to $11.7 billion, which is amazing, and it's a really good stock to kind of hold. And it's the fifth largest holding of Berkshire Hathaway, which is Warren or Buffett's stock investment company. So warning 151.6 million shares of AXP, which is crazy to say. Berkshire's stake is worth nearly $24 billion. And they also own shares of competitors like Visa and MasterCard, even though those positions are smaller. And their dividend yield is 1.3%. So a dividend yield is basically the amount of money that you receive and the little bit of money they give you to kind of, throw at you. So Coca-Cola is, again, a great example, and I have to completely agree with this, of recession-resistant business. So this means that when there is a recession, there is a downward spike, people still need to drink Coca-Cola. They still need to have a drink. So, Coke is always usually affordable to people as well. So it's not something that's going to go crazy high. It's not like Gucci or Louis Vuitton. It's a pretty stable company to be investing in at any point, because it's one of those products, and when we're looking at economics by itself, Microeconomics is a great way to explain this. If we're looking at something, it has more inelastic demand. So what that basically means, without explaining the whole unit that I learned, is that, as prices increase, the demand stays the same. So prices increase, prices decrease, it stays the same. And it usually means it's a necessary good. So Coca-Cola may not be perfectly inelastic, or it's not perfectly necessary in this way that we graph it in econ, but it definitely is pretty inelastic in the sense that the demand will usually stay about the same no matter what the price is, and it won't dramatically change, which means the stock it's a stable one to have. So Buffett has had his Coca-Cola in his profile since the 80s. Berkshire owns 400 million shares of the company, worth approximately $24.8 billion currently, and the dividend yield is 2.7%. And Coca-Cola is a really great dividend yield. I know that's one of their biggest selling points as well. Apple is a really interesting one because I've heard people take away their Apple shares, but people love Apple. And even with increases in inflation, I mean, yes, I do think that it might they might have to adjust with inflation if it goes super crazy high, but I do think it's something that people splurge on a lot. We see lines and lines and lines up for these $2,000 phones, which is crazy that people are spending that much money, but it is something people are willing to spend money on, which is important to note, because when you know what people are willing to spend money on, you can adjust for that, and that's why they're a $1 trillion business. So, they have tons and tons of phones and different products. Their dividend yield's only 0.6%, but I guess it's better than nothing. And Apple is Buffett's really largest publicly traded holding. He has so many shares of this. I was so surprised when I saw this. Well, maybe not surprised, but I didn't realize it was this high. His portfolio represents nearly 40%, or Apple represents nearly 40% of Berkshire's portfolio by market value. Of course, the sheer increase in Apple's stock price is one of the reasons for that concentration. Over the past 5 years, shares of the tech gorilla have surged more than 280%, which is, again, insane. And they're probably making so much money off that stock right now. This one's interesting, Chevron. This is a really big move recently in this year, in 2022. Berkshire owned $25.9 billion of the energy giant as of March 31st. A really big jump for its $4.5 billion stake in the end of 2021. So they really, really jumped with the amount that they put into Chevron. And today Chevron represents the third largest public holding at Berkshire. So even though the oil business is capital intensive, it tends to do very well during periods of high inflation. So yes, as I mentioned, oil is not great for the earth. We probably shouldn't be using it. We are running out of it, but it's still a money-making machine, and that's why people buy it. So oil really is the most heavily traded commodity globally, and has scored 45% year to date. The supply shock caused by Russia's invasion of Ukraine could keep that trend going, which again is, Russia has been, kind of taking the gas and doing stuff with it. So it's just going to keep going up and up. And I think it's important that, I think going into the energy industry anyway is important because, again, as I mentioned, it's really elastic. People need to drive, and they're going to drive no matter what, or at least the buses will. So, people got to get places, and nothing's going to let them stop them. And clearly, with the high prices of gas recently, it has not stopped anyone to get gas, even though the prices have gone a bit up. So I think that is also, really, really important to note and to think about. So those are some of Warren Buffett's trades. I think it's, again, important not to just trust him because he's Warren Buffett, but obviously think about what you want to think about in terms of that. And finally, I think I'm going to do this article from Vox, but I might not want to do it. I really like Yahoo News. Inflation has just been so high. Okay, I'm going to do this really quick article. So this article, again, is from Yahoo Finance, which was the one last time I just read as well. So this article headline to mention, oops, I pressed the stock by accident. Mini Dow Jones industry. So the title is 3 top dividends stocks yielding as high as 8.7%. Inflation still near 40 years highs. It might be good to move to nail down some income. So inflation again is just on such a high. U.S. consumer prices again have surged 8.3% in April, from a year ago, slightly down again for that 8.5% in March. So whether central bankers believe inflation is so short-lived, prices are on the rise now. To preserve purchasing power, investors usually turn to assets like gold and silver during inflationary times, but dividend stocks are another option. If a company can provide a rising stream of dividends over time while appreciating in value, it can give you a hedge against inflation. Of course, due to an extended bull market, most stocks don't pay much these days. The average S&P 500 company yields just 1.5% at the moment, which really is so low. If you pay $100 for that stock, you're getting what, like $1? You know what I mean? It's nothing, but there are companies with so much more generous payouts. And let's look at these, really high ones, reaching as high as 8.5%. So a big stock, Bank of America, huge one. Why? So while many sectors fear rising interest rates, banks look forward to them. Central banks hike interest rates to tame inflation. Banks lend money at higher rates than they borrow, pocketing the difference while interest rates increase. The spread for how much a bank earns widens. And it just so happens that quite a few banks, such as Bank of America, has upped their payouts to shareholders over the past year. So in July, Bank of America boosted quarterly dividend 17% to 21 cents per share. That gives the company an annual yield of 2.4% at the current share price. The stock market has had a sluggish start in 2022, and the Bank of America is down 22% year to date, but a major rebound could be in the horizon. And Goldman Sachs as well has a buy rating on the company, price target of $51 or 43% of where the stock sits today. Another one that they mentioned in this article, again, don't take it with a grain of salt what I say. But Southern Co is a big one, and this is a gas and electric utility holding company. See a really broad theme here with all of these different companies I've mentioned so far. It's really banks and the energy sector that is where the money's at right now. So, of course, this is a really defensive play because energy is something people are always going to need and are just going to give up. So, it is something that you can kind of be able to. They also have a really high dividend rate. Global Partners, so this one is if you want really oversized yields. You may have to look at these lesser known stocks like Global Partners. So structured as a master limited partnership, Global Partners is one of the largest independent owners, suppliers, and operators of gas stations and convenience stores in the Northeast, which is so interesting. So at the same time, it is a leading wholesale distributor of fuel products and is involved in transporting petroleum products and renewable fuels by rail for the mid-continental U.S. and Canada. So the business pays really high, quarterly distributions, and really high yield of 8.7%. So this is an interesting one because, again, convenience stores and gas stations are things we need and will continue to need even with inflation hiking. So yeah, I think that is a really great article. I will link it again. And really, overall, I just think that these inflation rates have been going up so high. But I think being able to learn how to combat it and learn how to combat it properly is what's important. Because when we're going through these times and when we're going through things that are going through such ebbs and flows and ups and downs, it's stuff that we need to, think about and we need to focus on and we need to, be able to control in some way because we do have power over our own money and it's important to be able to work that. And, it's, you know, very interesting. So, overall, I think just to kind of round off today's episode, I again kind of just want to mention that, this is obviously not for, you to take as financial advice. Don't do that. But really, overall, I just think that, inflation rates are going up, and even if they go down, it's important to know what to do with inflation rates and what to do with during all these different, times of economic distress. We do need to have strategies to be able to mitigate these things and deal with them and deal with these things that do happen on a large scale, but we do have the power to control it and control our own money. And don't let anybody ever tell you that you don't have the power because you do. And if you learn enough, and if you properly invest, and if you make smart decisions, you can definitely last through any time of economic stress. And if you hold your stocks, it usually goes pretty well. You don't really have to worry about recessions and, depressions and all these things. You can kind of ride the wave of the stock market and ride the gambling ups and downs, as we see a lot of the time, and you can kind of just, ride the whole thing, ride it until you don't want it to anymore. But yeah, definitely hold your stocks. I think that's important. Especially now when stocks are lower, you can buy a lot and then just hold it, especially if you believe in the company. Again, always do your research and believe in the company because that's what's most important. And as well, if you want some high dividend rates, look that up too. That's always a nice little bonus that you can have. So yeah, hopefully you guys all enjoyed today's episode. I definitely enjoyed recording today's episode a lot. I hope I can do more episodes where I can just talk about investing. I can talk about the stock market, inflation rates, things like that. I really want to talk more about the stock market, so I want to find out ways that I can do that in a fun and engaging way where I'm not just reading out numbers and, kind of making you guys yawn. I might do maybe an introductory podcast to the stock market. And I may just talk about certain things on the podcast about it, and that may be a good idea as well. And I can, uh, you know, make sure that the podcast we can talk lots and lots and lots about lots and lots of different things. So, anyways, thank you all so much for listening to today's podcast episode. Hopefully, you learned a lot about investing, invest time in yourself, but also invest in the stock market and inflation rates. So, please, if you enjoy the podcast, or even if you don't, connect on Instagram at ever.changingworld. Again, Instagram is at ever.changingworld. The Twitter is at everchangingwor. Again, everchangingwor. Important to know, I usually use Cambridge_bound. Again, Cambridge_bound. The website is shows.acast.com/ever-changing-world. Again, shows.acast.com/ever-changing-world. Thank you all again so much for listening. Tune in next week and next Tuesday for another amazing episode of the Ever Changing World podcast. And please follow to stay updating. Everybody, the world is always changing.